What's going on, guys? This is Kedar here, and the Internal Revenue Service (IRS) has announced several adjustments to account for the impact of the inflation. And yes, we are talking about 2023 federal tax brackets. So, in which tax bracket you fall in, and why the tax rates are so high, and how these changes from the IRS will affect your tax brackets. We'll check it out how these tax brackets will change for the next year for both individual and joint filers. So without further ado, let's get right into the video. So before we jump right into the video, make sure to check out other videos from our channel on stimulus programs, social security, anything related to money, benefits. Make sure to subscribe with bell notification turn on to stay updated to new videos we upload every single day. And with that being said, let's get right into the video. So it was kind of a fascinating what is happening with the IRS, and right now they are trying to avoid what called a tax bracket creep. The adjustment designed by IRS are done in such a way in order to avoid the tax bracket creep, and this is a merciful measure that came out of a Reagan administration. And some media celebrated that many Americans may see a slightly lower tax bill as a result of that, but the new tax brackets for the 2023 means paychecks for many Americans could see a boost, which will help consumers who are being hit hard by inflation and aren't seeing raises that keep pace with the prices increase. So without such inflation adjustment, workers who got an annual cost of living pay increases could be pushed into a higher tax brackets. And even though the standard cost of living didn't change at all, that's all particularly an issue this year because inflation is so high that the bottom line is we are seeing the IRS is just adjusting the tax brackets upwards by about 7%. So that means you need to earn about 7% more income to jump into higher tax brackets. And now many tax experts telling that this could result in some tax saving for millions of taxpayers. For instance, a married couple with $200,000 in income will save about $900 in taxes next year due to these higher income limits for each tax bracket. And speaking of what other important adjustments being enforced by IRS next year, well, next year IRS they have got many of these provisions are being changed for the inflation, and one of the major that impacts almost every taxpayer is the standard deduction. And this provision is used by people who don't itemize their taxes, and this is the vast majority of taxpayers. And this basically reduces the amount of income you must pay your taxes on, and that's also rising about 7%. So for instance, married couple next year can deduct $27,700 from taxable income, which is up from about $25,900 this year. And another big provision that is changing is on flexible spending accounts, and this money is set aside to pay pre-medical expenses. That's also getting 7% boost, so you'll be able to set aside about $3,050 more in 2023 in order to cover your medical expenses. And one more thing, you should keep eye on new limits for retirement accounts, as those hasn't been announced yet from the IRS, and the IRS will adjust those upwards for the inflation, and they will probably announce in the next couple of weeks, so you could save more for retirement, but we'll know that for sure in couple of weeks right from the IRS. So in conclusion, if we go through all the income tax brackets adjusted for the inflation, it goes like this: for individuals earning $11,000 or less, or married couples filing jointly $22,000 or less, they got 10% income tax bracket. And for individual income, those earning $11,000 to $44,725,000 as an individual, or $22,000 going all the way until $89,450 for married couples filing jointly, those people have got 12% income tax bracket. And those earning $44,726,000 going all the way until $95,375 as an individual, and those earning $89,451 to $190,750, those who are filing jointly, well, those people have got 22% income tax bracket. And for those people who are earning $95,376 to $182,000 $2,100 as an individual or $190,751 going all the way until $364,200 as a joint filer. Well, those people have got 24% tax bracket, and for those people earning 182,000 going all the way until $231,250 as an individual or married couples earning in the range of $364,201 to $462,500. These group of people have got 32% tax bracket. And speaking of the next group, we got $231,251 going all the way until $578,000 as an individual. And for married filing jointly, we got $462,501 going all the way until $693,000. Those people have got 35% tax bracket. And for last group of people, those earning $578,126 or more as the individual, or those people who are filing jointly earning $693,751 or more, those people have got tax bracket of 37%. In conclusion, bottom line is, on an average, it should help most of the taxpayers. As you know, we saw the average workers gain of about 5% this year, which means that tax bracket increases about 7%, and this will cover those with higher wages, of course, as the inflation is even higher than that, and that is about 8% right now. So those wage gains are not enough to keep up with the inflation. So therefore, people are actually losing their purchasing power. But at least when it comes to taxes, most of the taxpayers should see a break, at least a break even last year, thanks to an adjustment from the IRS. So with that being said, I hope you found this video helpful. So make sure to hit that like and do check out other videos from our channel, and make sure to subscribe with bell notification turn on as we upload new videos every single day. Thank you so much for watching this video till then, and this is Kedar from How to Guys signing out.